Thanks very much. Good afternoon, ladies and gentlemen. I'm Chris Carrigan from Quanta Investment Funds. By way of introduction, we're a Brisbane-based real estate fund manager. We are a multi-sector specialist, so meaning that we're not beholden to any individual sector. We've got an agnostic approach where we simply seek out the best risk-adjusted return in both sector and market. We currently have a portfolio of investments over $300 million. That's oscillated depending on market conditions, and the investment strategies for each of those investments has been as much as $700 million in the last 12 months. We have approximately 700 wholesale investors that invest with us in scale between $40,000 and one investor over $50 million. As I mentioned, we're in Brisbane. We have a staff of 35 people, and that we have in-house acquisition, investment management, property management, facilities management, project management, so that we can deploy management into these investments very easily. So in terms of our investment style, we predominantly have invested historically in retail, so shopping centres, but we also have industrial, office and some health investments. We are a core plus and value add investor. So what that means is our investment style is to give a very strong distribution that we pay net of expenses, interest and fees to investors monthly. We target a minimum distribution of 8% per annum paid monthly, and an equity IRR of 11 to 18%. That higher end of that IRR scale is based on the value add style assets that we target that have a very strong value creation thesis to them. As mentioned, our market we're somewhat agnostic in what markets we target. We're invested in every state in Australia except for Northern Territory, South Australia and Victoria. Our trusts, we've moved away from pooled open-ended trusts, and we typically we are bringing to investors typically single asset closed-ended trusts, so that we give investors certainty of what asset they're investing in and the certainty about how long they're going to be investing. So the last 4 trusts, including the one I'm about to talk about today, are 7-year trusts, meaning that we have an investment outlook, an investment horizon of 5 to 7 years, and once we have delivered the value creation initiatives we have as a part of that investment strategy, we look from year 5 or thereabouts, we're looking to exit that investment and return the equity to investors. As I mentioned, invested right across Australia, and that's currently 21 properties in 8 trusts. A couple of recent acquisitions. The property on the left there, Quanta Launceston Retail Trust, is a large format retail asset, 100% leased in Launceston, as the name of the trust suggests. Launceston was a market we really liked. There are more tenants that want to get into Launceston than there are tenancies available for them. We also bought that asset very counter-cyclically, and so we were able to buy it at very soft metrics. We're delivering 8% distributions to our investors currently, and upon renewal of the 4 tenants in approximately 3 years' time, we're expecting a strong capital growth and then an exit strategy. The multi-sector trust is a very robust safe haven style investment that we acquired again in 2022. It has a lot of health uses, service station, and has very long leases. Our strategy for value creation in this asset is that it's a classic case of the sum of the parts is worth more than the whole. So if we are to subdivide off service station, the food pad sites, sell them individually, we're going to be able to sell them for a lot more than what we bought the asset for. 157 Ann Street was another acquisition last year where we acquired a 48% occupied office building with a pre-commitment for a sports performance and recovery centre to take out the majority of that vacancy. In the 9 months since we have acquired that asset, we've done 8 leasing deals, and that's now 100% leased. The broad brush strokes of that investment are 8.15% distributions being paid to investors monthly. We bought the property for $39 million. We've spent $7 million. It's currently valued at $59 million. Next week, we launched the South East Queensland Office Trust, which is 2 assets in a closed-ended trust. So again, an investment horizon of 5 to 7 years, forecast average distribution of 8.5%. What is really standout of this investment are 2 things. One, the tenancy mix is unrivaled for this type of asset. Within these buildings, they're 99% leased, but 73% of the tenants are Commonwealth Government, State Government, head office for Queensland for Bunnings, head office for Queensland for Coles, head office for IOOF, NAB, and a whole host of household names making up the tenancy mix. It's got inbuilt capital growth, comes with surplus land with a DA that we're paying 0 for. We think that during the investment term, we'll be able to do something with that surplus land that has a carrying value of 0 and be able to deliver a special distribution to investors. The properties are under rented. Buoyed by the Queensland economy, the leasing markets, unlike Melbourne and Sydney, are very strong in Queensland, as evidenced by our performance and track record at Ann Street. We expect to be the tenants in these buildings average $460 a square metre gross, which is as cheap as it sounds. We believe that the market rent for these buildings is over $500, so we look forward to delivering rental upside and the capital growth that comes along with that. Could go on, time's running out. We are at the booth outside. As I say, this investment will be, we're raising $55 million. It will be launched next week, and we look forward to your participation. If you'd like to come and talk, we'd love to have a chat to you at the booth outside. Thank you very much.